Hi, welcome to today's property breaking news. Today we're going to look at how landlords should protect their rental cash flow. As the coronavirus or COVID-19 pandemic spreads and the impacts of it become more and more known, what I'm aiming to do in these updates is to really take the news and translate it into specifically what it means for property investors, property entrepreneurs and property developers. My name is Ranjan. I've been investing for 30 years in property, never known a time like this. It's a time where we're going to have to make changes to our business to adapt, survive and thrive these times. If you're new to this channel, you're really going to want to subscribe. You're going to want to subscribe and hit that bell icon because we'll be releasing regular updates to help you make sense of what's going on and what it will mean for your property business and your property investing career. Also, smash that like button. It helps us out on YouTube, and share this video if you know other property investors and entrepreneurs who may benefit from this information and having these regular updates. Share this video with them. In this video, we're going to look at the monumental cut by the Bank of England in interest rates to 0.1% and what that means for property investors. We're going to look at residential tenancies and what happens if your tenant has been laid off or they have the virus. What impact does that have on your cash flow and what you can do to protect that? If you are a serviced accommodation operator or a rent-to-rent operator or even a rent-to-rent landlord, what's your roadmap to navigating these times? And also what's happening with commercial tenancies? What happens if you're a commercial landlord facing commercial tenants whose shops are having to close down because of a shutdown? Now, many of you will know we have a property business. It's basically based in the London area. London is one of the places which is gripped with quite a few of the issues, if you like, covering the COVID-19 thing. And what I'm seeing is just as Italy was a few weeks ahead of the UK in terms of where they were at, I see London as being several days, if not a good full week ahead of where the other parts of the country, the other parts of the UK will be. So what myself and my colleagues are experiencing is really going to be quite useful stuff for people in other parts of the country because it's going to go nationwide pretty soon. Okay, let's start with the Bank of England's news. They have cut interest rates down to 0.1%. This is the lowest level since 1694. What does this mean for most property investors and most buy-to-let landlords? Well, it all depends really. If you got a buy-to-let mortgage after 2008, 2009, the chances are it's not going to make any difference at all to your mortgage payments. Remember, after 2008, 2009, most of the buy-to-let, well, virtually all the buy-to-let mortgages, they would have if they were linked to Bank of England base rate, they would always have a floor level below which the interest rate would never fall. If you are lucky enough still to have old tracker rate, more base rate tracker mortgages, which were set before 2008, you may be on rates like 0.5% over base rate. In those sort of circumstances, you will benefit from that. But these days, very few landlords still have those old tracker rates. So this cut probably won't affect most landlords, particularly if you started investing in property in the last 10 years. You wouldn't have those sort of tracker rates in place. Now let's look at residential tenancies. The issue with residential tenancies is that your tenants may be laid off. In London, for example, there are many people in the hospitality sector working in restaurants and theatre and the like who simply have been laid off. And there are also people who are isolating and have the virus. But those are relatively few, I'm finding. It's mainly businesses where they have literally shut their doors and they've sent their staff home. What I recommend you guys do right now is this. Get a spreadsheet together and list every single tenant you have in every single property that you have in your portfolio. dig out the referencing information and list what job it is that they do and how much rent they're responsible for paying you. You need to quickly ascertain how much of your rent roll, if you like, is at risk to people who are working in sectors where shutdowns are affecting their ability to work. That's something that you need to kind of maintain, if you like, as a spreadsheet on a daily basis to understand your cash flow position. Of course, there's a massive difference between whether you have single family lets or HMOs, houses in multiple occupation. If you have a single family let, of course, the tenant is responsible for the bills. If you run an HMO or a shared housing property, then if you've got a couple of tenants who have had issues with their jobs and all the rest of it, and they are struggling to pay, then you are still liable for things like the council tax and all the utility bills and services, and there is no leeway on that. Now, some sort of good news came in yesterday regarding buy-to-let mortgages. Before, it was possible to have a 3-month mortgage deferment, if you like, on owner-occupied mortgages. That has been extended across to buy-to-let mortgages, and that is buy-to-let mortgages whether in individual name or in the name of a company. That has been extended, but it's not being let off, if you like. It is only a 3-month deferment, and remember that interest is also charged on that deferment, and you will end up paying more. One thing that is not clear is if you as a landlord ask your mortgage company to defer payments for 3 months, whether that will show up on your credit file as 3 missed payments. Obviously, that can have an impact on your credit history and your ability to get finance in the future. Now, there's a lot of confusion among tenants about what this all means. This is not a charter for anyone to be let off rent. It's as simple as that. What it is the government has specifically said that if a tenant is self-isolating or has issues directly because of the coronavirus, or they're in an industry where they have simply been unable to work because of a massive change in their income, if any of those 2 criteria are true, then that doesn't mean they're let off the rent. They're meant to discuss this with their landlord and agree some kind of rent payment plan, and it's simply deferred. It's up to the landlord and tenant to come up with some kind of payment plan between themselves. The rent is not being let off. The only thing the government has put in place is that landlords can't evict a tenant in a 3-month period for non-payment. But the rent is still fully due, and you still have the redress, if you like, under the law to pursue that at a later date. So the key thing there is if you are being approached by tenants about ability to pay, make sure you check out or get some backup, if you like, of the facts that they're telling you and reach some agreement and reach some payment plan. With student lets, as universities are closing up and down the country, a lot of students are basically trying to hand in their keys and end their tenancies early. Well, basically they're on the hook for the whole contract period and they can't simply walk away. They're not allowed to do that. If you have parental guarantors, then it may be far easier to enforce because obviously most parental guarantors are UK homeowners and it's far easier to exercise your rights under the terms of the contract. An issue that is happening, and I'm seeing this in London, particularly with foreign students, is people just going back to their home countries again and literally handing in the keys. Now, having spoken to a number of landlords and agents, everyone's pretty much saying that viewings have fallen through the floor. The number of prospective tenants that want to go around viewing properties is at an all-time low. People don't want to get out and about. One way that we're looking at tackling that is video tours. I urge you to get your properties nicely staged, create a simple video on your phone, bung it on a YouTube link or something, and show that to prospective tenants who may be interested. What we're finding is that if people see that virtual tour, that video tour, then they only have to make one trip to that property to just confirm that everything's okay, and they'll sign on the dotted line. Although people are not doing viewings, there's still plenty of people that need to move. I think the challenge for us is to make extra sure about referencing. We had someone today that wanted to move into a place, and they say they're an events manager. Being as all events are simply not happening anymore, I don't understand how that particular job gives surety of income. So I think specific attention with new tenants needs to be paid to the actual jobs they're doing and the security that you're going to have going forward. If you're a rent-to-rent or serviced accommodation operator, you'll be facing tough times. Of course, if you're doing serviced accommodation, your bookings have fallen through the floor. If you're renting out through Airbnb, their cancellation policy is reasonably simple. If you cancel with 14 days notice, you can get a partial refund. But if you cancel with less than 14 days notice, there is no refund. So you've got to work with that cancellation policy, but your bookings are typically at all-time lows. If you're doing serviced accommodation on properties that you're renting, then of course your margins are going to be decimated. What I do recommend is that you speak to the head landlord. The head landlord will be aware of this situation, they'll be aware of your margins, and at some point you've got to make the decision, do you agree a new revised interim rent with your head landlord, or do you simply hand back the keys and say, this is no longer viable for me? These are decisions, particularly if you're doing rent-to-rent or serviced accommodation, that you're going to have to look at over the coming weeks. And finally, with commercial tenancies, we're seeing, the next quarter rent payment day is nearly upon us. We're seeing some commercial tenants basically try it on. If they've got a large number of stores or whatever, they're sending out standard letters saying, trying to fish really, to see whether there's any scope for the landlord to give them some leeway. The standard response that we give them is that businesses have been given a record amount of help, if you like, by the government in terms of loans, in terms of grants, in terms of business rates, holidays. So they are well placed to be able to basically pay this month's quarter rents. What it boils down to is what sort of commercial unit are you the landlord of? If you're a landlord of a commercial unit which is in an area of high occupier demand, then you'll be able to play hardball. If you have a commercial unit which is in an area of low occupier demand or has no alternative uses, then basically they have the upper hand in the negotiations. It's interesting times. We've talked about commercial tenancies, we've talked about if you're doing rent-to-rent or serviced accommodation, we've talked about residential tenancies. But if you're going to look at protecting your cash flow going forward, the key is negotiation. It is going to be all down to your negotiation skill, your ability to negotiate the best deal for you and the best deal for your cash flow. That's what's going to be about in the coming weeks. More updates as news comes out. Make sure you subscribe and hit the bell icon. The situation is changing very fast on a daily or hourly basis. And what I'm going to do on this channel is keep you up to date in these property breaking news bulletins about the information you need to know if you're a property investor or property entrepreneur. Do remember we have Baker Street Property Meet. While we are under COVID-19 restrictions, we are holding our Baker Street Property Meet online. This is going to be a fantastic event. Our next event, we have more than 450 people who are already registered for our first online Baker Street Property Meet event. If you want to register, simply go to www.bakerstreetpropertymeet.com, check out the agenda, register. The first meet we're doing is absolutely free, so you've got nothing to lose. That's on Thursday, 26th of March. See you guys shortly. Bye for now. If you enjoyed this video, hit the like button. If you're not a subscriber, what are you waiting for? Subscribe, hit the bell icon. As soon as we upload, we'll let you know. And enjoy these. They're all dedicated to helping you be more successful in property. Happy investing!